last week of January already, but we're bringing you our Monday weekly update. How you going, Eliza?
I'm going great, thank you, David. How about yourself?
Really well. Super excited to be doing what we do here, and super excited to be sharing the latest update with all of our clients, wherever you are across the country. Hope you're having a fantastic day, and hope the year's kicked off really well. Our team here at REIF have been quite busy, helping so many clients right now all across the country. Our finance specialists, our property specialists really make the most of the current market. And you know, COVID, we were hoping by now would have disappeared, but here we are. It's still going. It's out of our control. We've got to navigate it. But what does that actually mean? What's happening out there in the overall market? What's happening in the lending space? What's happening in the real estate space? Last year was a massive year. And this year, you know, we see things just going gangbusters again. And the opportunities for people, no matter where you are in your stage of financial freedom and building wealth and finances, and whether you've bought your first home, whether you haven't yet, whether you've got your home and have a couple investments, whether you're coming into retirement, how do you navigate the current economy and the current world? You know, how do you set yourself up and make the most of what's quite uncertain out there, isn't it?
Yes.
Because things keep changing and we don't really know what's happening, but it's out of our control and we've got to run with it. But we're going to kick off with the finance world.
Yeah, there's a lot going on there. And a lot of hope, I guess, for anyone looking to refinance or even just get into the property market. So lenders are offering great cashback incentives.
Huge as well. And we're seeing the brokers there, you know, being able to negotiate with lenders for our clients, you know, cashbacks of around about that $3,000 to refinance. So banks want business, they're open. And what we find, a lot of our clients that we come across, they sort of get a home loan and they set and forget, and they just sort of park that up, you know? And it's funny, like a lot of people will just drive around and they'll be looking for the cheapest fuel to save a few cents, but they don't worry about looking at their biggest household expense, which is the mortgage, and how much they can be saving on that. But right now, we've got lenders there that are super competitive. They're offering cashbacks. They're offering fantastic deals. I'm just going to do a bit of an example to give you guys an idea, because there's some pretty cool offers out there in the market right now. But let's say someone has a home loan, Eliza, of $500,000.
Home loan.
500 grand on the home, and let's say they have an investment loan of 500. So let's say you've got a total amount of lending there of $1 million. A lot of clients, and this is a very common rate, so guys, if you haven't checked your rate, check your rate. A lot of people on the home will be paying around about that 3%. A lot of people on their investment may be paying around that 3.5%. We've even come across clients paying 4 point something. We've come across paying even more, I know. Alright, so let's say we were able to save our clients and get them a home loan, and these rates are floating around now, your low twos, so it's about 2% on the home.
So we'll go down to about
2. And let's say we've got on the investment 2.5. In total savings there, we'd be saving $5,000 a year on the home and $5,000 on the investment.
So 10K.
$10,000 a year. Whoa! That's a pure example. And some of these lenders are giving cashbacks as well. So in some cases there, we're able to negotiate a cashback, depending on the lenders that we may go to, and that could be another $3,000. So you can quickly see that's $13,000 we can put in our client's pocket just by doing a simple review from day one. That's a lot of cash that could be in your pocket. Over 10 years, that's 130 grand. Over 5 years, that's $65,000. That's that wedding and honeymoon, or that's kids' education. Huge money that gets left in the table there, and it's better in your pocket than in the bank's pocket. And it makes us cringe to see so many people not worrying about it and losing that money while there's better opportunities. And our team right now of brokers across the country are helping a record number of clients do a simple review of their lending, of their situation, and be able to help get that money back in their pocket, because that's what it's all about. And we really stop and compare, and we look at 40 different lenders there, you know, and 1,000 different products to go, what's our client's situation, and is there a better solution out there? We take care of all the paperwork and all of that process for them from start to finish, so they can have a nice and seamless process with more money in their pocket at the end of the day. So it's super exciting, guys. If you haven't had your home loan review, definitely get in contact with us. We'd love to be able to do a review. Every 12 months, you should be checking on that home loan and making sure what lenders like to do. They'll sneak up on you. You'll have your lending sitting there, and it's so funny seeing it all the time, where, you know, our clients, you know, they'll just be with a current lender, and the lender's putting their rates up, but then they're giving better offers to clients that want to come that are new. And it's like, what about the existing clients and looking after them? So guys, it's important you've got the right broker in your team looking out for you and making sure they're keeping the banks on their toes.
And right now is the perfect time to do it because as we've seen, like certain lenders already in the past 3 months, they've already like increased their rates by 3 times already.
Yeah.
So now's the time to fix if you need to.
That's the other thing as well. We're starting to see fixed rates going up, and rates are still low. And you know they are talking about rates going up, so it's important to review that and go, well, is a fixed rate the best option for me? Should I keep it variable? There's pros and cons there. We're seeing a lot of clients do a bit of a split, so they're safeguarding themselves. They're keeping some variable, some fixed, so they're not as exposed should rates go up as well. But that's what's happening in the refinance space. What about in the first home buyer space?
Yeah, there's a lot going on in first home buyer space. Was it one lender was offering
Cashback, yeah, that was announced about a week ago. So we had a lender offering $1,500 cashback if you're a first home buyer and getting into the market, which is massive, yeah?
Yeah.
Now, this specific lender as well is lending up to 98% of the purchase price. Again, crazy. And I think a lot of first home buyers don't really know what it takes to get into the market. They don't really have an idea there. And what they may go to their bank because they bank with CBA, just say, and they walk into the branch and CBA will say, look, this is what we can do for you. But they don't really take a full perspective of the market. And again, this is where a broker would come to the table, where they're able to assess and analyse and be able to see what's going to be best. But on a 98% lend, as a first home buyer, let's say we bought a $500,000 property.
Oh, we like the 500.
We do, don't we? It's a nice round number. The way the market's going, depending what you're looking
Pretty
for.
realistic.
You can still get in some places for that, others you can't. But yeah, let's go. On 98%, the lenders you've got to pay lenders mortgage insurance when we have less than 20%. So we need to put in about 5% on that situation. So 5% on 500,000 would be 25,000. There we go. And there's some purchase costs, there's solicitor fees, and there's bank and lender fees, and we usually allow about 5,000.
So we'll round that up to about 30.
About 30,000.
Conservative.
Now, depending on the state that you're based in, there's first home buyers grants, and they can range $10,000 if you're in Melbourne and Sydney, 15 grand if you're in Queensland. Regional areas, there's even more depending where you're looking at buying. And then there's also concessions and exemptions for stamp duty. So, instead of having to pay tax on buying, so in some cases there, depending where you're buying, what state, you can pay 0 stamp duty, and you can also pick up $15,000 in grants.
So that really slashes that down.
Slashes that down to about 15. Banks do want to generally see that you have the ability to save a 5% deposit, and it's always a good goal to work towards having that 5% in savings in the bank over a 3-month period. So first home buyers, I think a lot that we're talking to and our team are talking to, are feeling like they may have missed the mark.
Yeah.
It was a big year last year.
And the media can be pretty discouraging for first home buyers, especially at the moment. But it's incentives like that proves quite the opposite.
Exactly. And then the news not going to tell you what the banks are offering, and they're giving you the fear and the doom and the gloom. But there's still opportunities there as a first home buyer to get in without having to save a huge amount. As long as we can show the bank that you have the ability to save and you can afford to repay the loan. So if you're a first home buyer, a lot of them that we are speaking to are feeling a bit discouraged, maybe have missed the mark, prices keep going up, but there's a massive opportunity to still get into the market and get a slice of the pie there and set yourself up. And buying your first property is really a foundation that you can then utilise to build a property portfolio and to generate wealth. And the sooner you can get in, the better in terms of what you can achieve long term with your wealth creation goals.
Love that.
Well, we're reading up this morning, APRA had an announcement.
So the average Aussie homeowner is 45 months ahead in their loan repayments.
Wow.
So that's like almost 4 years.
4 years with advanced repayments. That's massive. And I think realistically, how have people been able to get so ahead on their repayments, and why is that the case? We've really got low interest rates. We've never seen interest rates this low. And we also have spending at quite a low as well. We haven't been able to travel as much. There was all those lockdown periods where we couldn't, be able to get out and about and spend as much money as we may have otherwise spent, which is great from a perspective of being able to have that wealth sitting there, having those buffers and safety nets. We always talk about having a war chest and the importance for everyone to have that war chest put aside of that cash for a rainy day. We don't know what's going to happen, and it's important we've got that there to safeguard ourselves and be able to make sure that we're not going to put ourselves in a compromised position should something happen out of our control. But the most exciting thing I wanted to share with you guys as well is reading that, and I was talking to Eliza about this morning. There's so many people with all these extra repayments, but what are they doing? And in terms of making those repayments, we might clear the whiteboard and start from scratch. But a lot of people there, when it comes to making these extra repayments, are just putting that money straight on the loan. And what I wanted to chat about there is, instead of putting that straight on the loan, what we want to do is have it sitting in an offset account. So let's say we've got a home loan, and I'm going to change the numbers up now. Let's say we owe 300 grand on the home.
So this is owings.
Yeah.
Okay.
So we've still got a 300 grand loan. A lot of people are making their repayments and putting it straight onto that. So they're reducing their loan every month. And that's entirely what a common sense approach would be in terms of thinking that's what I'm going to do. Yeah. What we want to do is, on that loan, is we want to have an offset account linked to our loan. Now, offset account works exactly like making extra repayments, but instead of having it put on the loan and available in a redraw, it's sitting in what we would assume and look like is a normal account, but behind the scenes, it's offsetting our home loan and saving us interest. So essentially, it's the same as putting the money on the home loan, but it's a different structure. Now, this offset account, we want to put your pay into. We want to put any rent that you may already be collecting. If you are collecting rent at the moment, we want to be able to have that sitting in the offset account. If you have tax credits coming back in because you own investment properties, we want to have that coming into the offset account. We want to have as much money in that offset account as we possibly can. Now, one big thing that a lot of people don't realise, if you've got 300 grand on your home that you live in, owning, and you're paying that down, but just say in the future you decide to move out of that property and turn it into an investment property, you're then not able to claim that money as a tax deduction. Any redraw that you put into the loan, any extra repayments you put and then take back out, because let's say you want to turn that into an investment and use that extra repayments you made as a deposit to buy another property, you lose the tax deductibility on that. And that's how I call it a nugget there. A lot of people don't understand. So essentially, but if it's in the offset account, and should your circumstances change in the future, you can then still claim a full tax deduction on your 300 grand home loan.
That's awesome.
Awesome. And that's what we want to do, to be able to make sure you've got the flexibility, because your situation and circumstances can still change, but we want to make sure we've got the most tax effective strategies and structures in place so that no matter what, we're able to just make the most out of getting more money in our pocket instead of paying the government. You know, we covered off before, getting more money in our pocket instead of giving it to the bank. It's just financially working smarter and having everything structured in a way that sets you up for success and helps you build wealth instead of making everyone else rich along the way. You want to get yourself right. You want to get the system working for you. They're not going to tell you that.
No.
The government's not going to tell you how to structure that. They want more tax. The bank's definitely not going to tell you how to structure this. They want you to pay more interest. But we need to work smarter. And this is an example of having the right finance team, the right property team supporting you, as they'll make sure they're working for you, not the bank. And that's what our team are doing right now across the country. We're helping a record number of people save money on their home loan, save money on their mortgage, set themselves up properly with the right structures, and also be able to invest for their financial future. That money that we're putting in the offset account or putting in extra repayments, we're able to utilise to have it working in cash flow investments as well, and that's one step up. We're saving money, we're getting more tax money in our pocket, but then we're investing in cash flow positive investments. And if we look at 2021, there's been a massive property growth across the market there. A lot of people are sitting on equity. They've made 100, 200 grand in equity in their property, and there's massive opportunity to then tap into that and to be able to invest and build cash flow positive investments that can set up passive income for the future. So you don't have to go to work and you've got that money coming in. And if you want to go to work, you can. But it's all about being able to live life on your own terms. Guys, happy Monday again. Have an awesome day. That's us. We'll see you next Monday again, live with more finance and property updates. We're here to help you make the best of 2022. Set yourself up for success financially. Have an awesome day. We'll see everyone soon. Cheers.